John here with Elton's Retirement Journey and Travel. Thanks for coming back to my channel. In this meeting of the Retiring Club, we're going to be talking about retiring early with 400K. So I retired September 26th from Morgan Stanley, where I was there for 6 years and 5 months. And my nest egg was right at about 400,000. And I was able to covered myself with the last paychecks for all of October, but November and December I had to take a distribution, and I used that to cover myself as well as to take a trip to Germany. In this segment, what we're going to do is look at how I have it set up, how I came to the decision that it's okay for me to go ahead and retire at the $400,000 mark. And I'm also going to explain to you how I think I can make that last and continue to grow. So, my name is John, and you're with me at the Retiring Club. And this is Retiring Early on 400K. I'm going to go ahead and bring up my presentations. Okay, so retiring on 400K. So during my investing years, I started with a Dean Witter account, and it is now over with E-Trade. So I have these investments in there. It's set up as growth in income with the other investments over at Fidelity as a rollover IRA and at Charles Schwab. Now, the reason I have multiple IRA accounts is that during the working years, each employer had a different plan. If I found an investment that was doing quite well based on its annual return, I want to keep those. I don't want to throw them away and go buy something else. I want to capture the compounding of the investments. So what I would do is I would open an account, move the money over. A lot of the 401ks have investments that you've never heard of, and you probably don't want them anyway. So you move them over in cash and you pick some other investments. So we have 19 funds here, the growth and income. Now, the growth portion of it, I consider the appreciation. You buy $1,000 worth of, on an investment, it returns 20% over the entire year. Now you got 1,200. The 200 is your growth. The income portion, the way I'm going to be using it is at the end of the year or through the year, it pays a dividend and a short term and a capital gain that normally would go back in to purchase more shares. I'm leaving that as the income and I'm turning off the reinvestment and I'm allowing it to go in a sweep account. So the growth and income portion, while the market is doing really well, I'm going to allow it to generate the income from the yield of these 19 funds, and I'm going to live off of that. I am pretty much 64 in another couple months. So going into 2026, the countdown starts. I've got 3 years before I collect Social Security. The Social Security that I will receive will be so much that I won't need to do this anymore. Any money that comes out of this is going to be for whatever I want to do, and it's mostly going to be travel. So we have 19 funds valued at 300,000. The growth in income generating here. Now I have compartmentalized my investments in the Federal Reserve of John, and that has $100,000 in it, all tax free, with 5 funds. Now over in the pre-tax, the IRAs, E-Trade, GOFXX, Fidelity, and Schwab all have money market accounts in here. So they're now up to 22 investments in pre-tax accounts. Over here, I have it as a money tree, the Roth IRA equities. They are fully vested. I've met the 5 years. FIDSX is financial services, ROGSX, technology, MDFOX, the Magnificent Seven, very low cost, PGKZX, another technology, and one that is not listed, that has not vested, is FISX. FXAIX, I believe it is. That is the S&P 500 over at Fidelity. I believe that's the ticker symbol. That is a couple years away from fully being invested. It's in the 401k with my employer. So these are equities. These can go up and down. Over here, um, the tax-free high yield savings, that's where that other 50,000 is in. And that's what I'm going to be drawing on if need be. Now, for right now, if I had a down market, I would not use the reinvestment of the capital gains. I just turn that back on the reinvesting, and I'm gonna pull the 20,000 or what I need out of the pre-tax account and pay my taxes on it like I already planned to do. So it's more of like Steve would say over at Steve's Retirement Corner. I'm just going to be taking the money out of a different pocket is his term. And so that's what I came up with. And it would go into a high yield savings. And all of these investments are actually earning money. I'm earning about $300 a month in interest right now, and I just leave it in there. And it will go into the cash box. The capital gains and dividends that are going to be paid out this year, which we are going to go over in detail, will go into this cash box. It will earn 3.7. It is a high yield savings at uh, VO Bank. It's a money market. It is my cash reserves. And I got E-Trade Premium Savings. That's at 3.5%. The interest is taxable. The capital gains and dividends are taxable at the end of the year. And then I have a regular savings account tied to my checking account in case I'm a few dollars short on something. But this is basically the setup that I have. I'm very confident that this will last years into the future. It comes from studying all of the creators who have retired early. Everybody's got fixed income. If we go and look at um, the pre-tax money markets, then that's about 70,000. And I would just pull the money I need out of that and not fool with the equities while they're down. So I feel that this comprehensive plan will allow me to do very well. Um, and there's a lot of growth in there. I have about 50,000 on the sideline that I'm waiting to deploy in new investments for long term, just in case when the market goes down. But right now, the 300,000 that's growth in income has about 70,000 that's fixed income that will cover me for the next 3 years in case of a down market. So this is my presentation on how I plan to live. I'm going to use the capital gains and dividends, and I'm going to feed the cash box, and then I'm going to draw down on that slowly. It'll still be making money at 3.7% because it's in a VO Bank money market. And if I work part time and I don't need to pull so much, then I won't. And I'll still be able to take vacations because this cash box is a little bit more overfunded than what it needs to be for 1 year. So I'll be doing the things that I want to do here in retirement. So this is my presentation on retiring early on 400K, how I've got it all structured. I'm very confident this will work. We'll be coming out with some other videos next week. We're going to start examining those capital gains and see how much they really paid out, those 19 funds under growth and income. So come back for that. And I want to welcome you to the channel. Go ahead and like and subscribe as I go ahead and break down the specific details from what I learned over the last 5 years planning my retirement. My name is John.